there's massive wealth being transformed from regular people to big conglomerates or the government. And they're just trying to take the real assets away from you. And so I talk a lot about in my book is being cautious of not having some things that you own by yourself, because when they switch this wealth transfer that's happening, and it's happening all over. I mean, look at what's happening in Los Angeles.
Hey, Inspired Tribe, my fellow freedom lovers. It's John Nolan here. Thank you so much for tuning in. Thank you for joining us again for another inspired conversation. You know, the world, especially this country, but the world is changing at a phenomenal speed, and things are moving so fast that it's hard to keep up. One of the important, areas of all of our lives, of course, is finances. People are looking uh, what are they going to do with their money moving forward? You know, you hear digital currencies, you hear crypto. On the other hand, you hear precious metals and other potential investments. So I thought we'd bring back our dear friend and partner, the founder and CEO of Noble Gold Investments and the author of the brand new book, Silver is the New Oil. Please welcome with me, Mr. Collin Plume. It's good to see you, my friend.
Thank you. Good to be on. Excited. So there's so many topics I want to talk about today. So I'm happy we're here. It was a interesting day in the markets and a lot to go over. So excited to be here.
Same here, and I really want to talk about this new book. Intriguing title, intriguing principle. But you said something off the air. You said, "Have you seen this new DeepSeek thing, which is the Chinese answer to OpenAI's ChatGPT?" You were very excited about that. What was happening with that?
Well, I think that when you look at these technologies that are coming out, NVIDIA, obviously the chips play a big part into a lot of this AI technology, and they've really been dominating the market. And I've just been waiting to see if there is someone's going to come in and just be able to do it faster and cheaper, and because some people aren't familiar, there are AI that are free, but to get a lot of the usage there on ChatGPT, there's different levels that you can pay for, all the way up to $200 a month, which is that's a costly expense, right? If you're using it, like a lot of people that I know that are using it pretty consistently. So I wanted to see if there's anything out there. So obviously this DeepSeek hit the market a little over a month ago, and over this weekend, there's been a lot of testing, a lot of communication. People have been talking about it, that it could replace some of the usage and just be a strong competitor. And I used it, started using it a little bit today, just tested it out to see what it could do relative. And it's free right now. So free compared to either $20 a month on one level for ChatGPT or $200 a month. And I actually found that some of the things that it was doing, I thought were better. And my reasoning that I thought it was better is that it takes you through it's actually like, when someone just tells you all of their thoughts of why they came to an answer, DeepSeek does that. As opposed to ChatGPT just kind of gives you the answer more. They do give you a little background, whereas this DeepSeek it'll go through its thought process it's not as fast, but it'll kind of give you its thought process of how it comes to an answer, which I actually scaringly feel is more human. But also very helpful in that, sometimes I'll use it for, writing ideas or like coming up with concepts, marketing ideas. So I put some prompts and some ideas for social media, and it popped out some hooks of things that we should do, call to actions, all the things that I would be using. And it had a reasoning behind it. And they're really well thought out and very interesting and based on the data that it had. So the stock market reacted, obviously. And, I've talked about a lot. This is that, you have these top 7 tech companies that are dominating the stock market in terms of growth. And it's scary because it's such a narrow scope, right? You have 7 companies, leading the charge for 20 to 25% of the growth in the stock market. It's not sustainable. It's just not sustain. It's impossible to sustain that. And we've never had anything like that in the stock market. So we had the stock market near all-time highs, and obviously people were feeling good about it and things that are happening. But if you really look at the numbers, a lot of the wealth is in a very small amount of companies. And that makes me nervous as an investor to have so much wealth tied into so few companies. Where if you compare it to the 1970s, they had it was called the Nifty 50, right? And so you had these 50 companies that held the majority of the wealth, and obviously that's more sustainable, right? Because it's much wider. So it's just interesting what's happening, and the market really pulled back today. The amount of money that was wiped out today, that billions, I think it was like 600 billion was wiped out in a day. So it was a massive amount of wealth that was lost over the idea that maybe there's someone that's going to do some of this AI stuff a little better, a little cheaper, right? More competition. NVIDIA has kind of been dominating, and there's going to be some other players out there that are going to come to the market and try to take over some of that business and do it cheaper.
That's quite incredible to think that, you come up with an answer to ChatGPT, and that's what happens on the market when they announce that it's been more successful with users, right? This is $600 billion. That's a big reaction, for comparatively seems like a small news item, but it isn't a small news item given that the vast majority of capital is flowing towards AI and all these technologies. But like I said in the beginning, you just released this brand new book. Is
Yep.
it's Silver is the New Oil, and I did use AI today to find out just a few interesting facts about oil, because that's a big statement, right? To me, that's like, wow. Uh,
Mm-hmm.
in the commercial production, oil started in 1859 in Pennsylvania with the first commercial drill at 15 barrels a day. Today, the world is producing 88.5 million barrels a day, or that's 3.7 billion gallons of oil per day that's being produced. That's incredible.
Yeah. Yeah. It's an
So,
incredible. Yeah, absolutely. Yeah.
so saying silver is the new oil piqued my interest. Tell us about the book. What do you see happening? Why is silver on the rise in such a big way?
Yeah, and I think that, listen, oil will always be around, and so it's not. I'm not saying that it will completely replace oil. What I talk
I
about in the
understand.
book is that the opportunity is similar to what oil was in the late 1800s. That's what I
That's
believe.
how I read it. That's how I read it. Exactly.
Yeah,
Yeah.
that's what I believe. It's a and if you look at a lot of the uses of silver and oil, and I have a lot of charts in my book that talk about it, they do have a lot of similar uses. Obviously, like automobiles is gas, and we're moving towards electric, which silver plays a big part in EVs. That's a big part of where it's going. And I don't know if it'll totally take over gas. I think it's just a part of it. It's part of the puzzle, is that we're moving into other energy sources. Solar is mass. I mean, a lot of the book talks about what industries are going to need silver, and solar is a big part of that. I mean, industrial demand for solar panels alone, they think is going to go up at least 14% this year, and they think that's just going to continue. 14 to 17% of the silver that comes out of the ground will go to solar for the next 5, 6, 7, 8 years. I mean, that's a big
That's a
part.
lot.
It's a lot. It's a significant amount. And also, if there's anywhere from 15 to 30 grams of silver in these solar panels, and people are going to hold solar panels on the roofs for 25 or 30 years, let's say, that means that silver's gone, right? It's not coming back. It's not going to be recycled. If it's ever recycled, it's not going to be recycled for a while. So it's not like it's coming back into the market, right? Which obviously every time you pull something out of the ground, you take it and it's used in something that's not recycled. That just means there's less of it available for new industries coming apart. Um, you look at military. I tried to find the exact statistics on it. You can't, because the military doesn't want to release it, but they use silver in a lot of our missiles. They use it in a lot of our different components. It is a big part of it, but they don't want to tell you how much it is, because they don't want people to rush and buy all the silver. But they're using silver pretty consistently in a lot of military applications. A lot of medical devices, the mesh, they use silver. there's millions of it because it's a good metal for mesh connectivity. Obviously, cell phones and all of the things that we're using, but the list just goes on and on. And so when you look at the opportunity of silver, I think it's an opportunity of what oil was in the late 1800s when a lot of wealth was really created. That's, you look at the J. Paul Gettys and all these families that just really were able to build, wealth that's, I mean, there's still Gettys that are living off that oil today, right? So you're talking about, 140 years later. So I think it's if you look at the markets, you look at what silver can do, and you look at the future. That's what makes it so integral into our society. And those are the things that I look at as I say, well, listen, crypto is great. Everybody's talking about it. It's gone up and the excitement is good. But what is it replacing a lot of the things that we need day to day? Is it actually replacing? Most of the cryptocurrencies are not. They're not doing that. Silver actually has a utility, right? It has a utility in today's world, and that utility is not going to go anywhere. Whereas the top 7 companies on the tech companies can be beat, right? It's proven today. We looked at it. You look at other industries that are necessities, and I just think you look at silver and it's a necessity. It's not a want, and so I think that's what puts it into such a unique category for me. Also, the market is really small on the stock exchange relative to gold and some of the other markets. It's such a tiny market, which means it can really move quickly if you get a lot of massive buying into that market. And so those are the things that I really talk about. And I really talk about the new asset economy, which I believe that we're in, is that you have to go opposite the World Economic Forum. You have to go opposite what people are saying out there. Every company is trying to get you to rent or borrow or be in a position where you're not owning anything really on your own,
And be happy.
and be happy and enjoy it. And it makes it easier and your life's going to be better. And don't worry, we're going to take care of you. And so my book talks a lot about what happened during COVID, why the government was really pushing everyone, giving free money away, and just kind of making people more dependent. So they're just adding more dependence. And everything that I'm seeing right now is the government's they're acquiring assets, and there's massive wealth being, transformed from one hand, from regular people to big conglomerates or the government. And they're just trying to take the real assets away from you. And so I talk a lot about in my book is this nanny economy and being cautious of not having some things that you own by yourself. Because when they switch this wealth transfer that's happening, and it's happening all over. I mean, look at what's happening in Los Angeles. That's a wealth transfer. That fire is going to transfer a lot of wealth from people that can't afford to stay in their homes, unfortunately.
Or North Carolina, for that matter, or East
Yeah, right.
Tennessee.
Yeah, absolutely. And, there's this big push in Los Angeles. They want more low-income housing. And I guarantee you that a lot of these areas, even in the Palisades or all over, they're going to have some low-income initiatives going in there. And that will be land that some regular family was living in, that was happy, that was living in some gorgeous place. And now they can't afford to rebuild their home, and they're going to end up selling, and the government's going to end up picking up some of those lots. And it's just more of a transfer of wealth that's happening. And it's really not what the American dream is. It's not what the Constitution is. We're supposed to have real money as our currency. This is it, real money. It was supposed to be gold. And I just see this happening day over day, is that they're taking assets out of our hands. And unfortunately, with any means necessary, the fires in Los Angeles were preventable. And so
You're putting it very diplomatically. I would say they're not just preventable; they were, for all intents and purposes, we're looking at a tax. I mean, when even the president goes on a presser and says, it looks like it's been hit, we're not going to talk about it. It's not nothing to say that. You know what I mean? It's not like you say that lightly.
Yeah.
But, and to your point, if you study the monetary system, central banks and fiat currency, that's what it always does over a certain period of time. It transfers real assets and wealth from the working to the oligarchy. That's
Yeah.
basically how that transfer works.
Yeah.
So, what do you see in terms of silver? And I really want to talk about gold too, because there's some exciting things for gold happening too. But where do you see silver going in 10, 15 years? Are we going to see the price doubling at some point, tripling, quadrupling? What do you think is possible?
Yeah. Well, I think that if you look at all these industries like solar panels and all these industrial uses continue to have shortages like they've been having year over year, and we're talking double digit shortages. If those things continue, that's gonna send a signal to the mining community like, hey, we're gonna need to keep up with this and continue to mine silver and grow over this time period. But I think that there's a few things that could happen. There's peak oil, which they don't know the exact date of when that could happen. But there's been a lot of people say the peak oil is 2030 to 2035, which means they're instead of them being on the growth pattern for oil, then they're going to be on the downside for oil. If that happens, then whether like it or not, they are going to have to make a shift to some of these alternative ways for us to move vehicles and move energy, and that will push the silver component and making it a bigger part. It's already happening, but if we really see that the downside of oil, and that Saudi Arabia and a lot of these Middle East countries, they're preparing for this. They're acquiring metals. They're acquiring essential metals. They're diversifying from oil. They see the writing on the wall, and they're in the oil business. So I think all their wealth was built on oil, and they believe that they need to diversify. That's why they're building all these beautiful cities, and they're buying all these soccer teams, and they're doing all these things. Is they have to diversify from this one income stream. And if they're doing it, and they're in the know, and they have the majority of the oil that's coming out of the ground, you have to think that they know something that's happening. So I think in terms of projections, I always look at first of all, just getting back to its all-time high. But in my book, I talk about, I think in the next 5 years, silver sits in the high 50s, $57, $58 an ounce. And then my 10-year projection would definitely be in the $120 to $130 range.
Wow, that's
For silver.
quadrupling it.
Yeah, I think it should hit those numbers based on just some of the projections that I'm seeing happening out there. And it's still affordable enough that industries are going to continue to use it, but it's still a low price enough that not all of it's going to get recycled. And I actually think for an investor, that's the greatest thing that you could have, right? If you had a cell phone here and this had an ounce of gold, every time somebody didn't have this, they would pull it out, right? Or even a half ounce of gold. But if there was an ounce of silver in here, they're not going to put the work in. So that ounce is lost, right? And so the more of the industries that are like, and there's a lot of those that are like that just, they don't have enough silver for them to make it worthwhile to recycle. And so all that silver in all those industries just gets, it's gone. It's never coming back into the system. So yeah, so I think, I definitely think the high 50s is my, 4 or 5 year plan. And then, $120 to $130 an ounce in 10 years, I think is a realistic number. And that's if we don't have any, situations where mining is stopped or maybe some of their projections are wrong, because that could happen too. They could be off. Maybe they're not going to be able to find as much silver as they think over the next 5 years. If that were to happen, then I think those numbers are very, very conservative.
Mm-hmm. I agreed. And, there's also in terms of gold, which, I'm even more a silver than a gold guy, but I'm looking at gold too, what it's done over the last 10 years, what it's going to do, and the signals that are coming from the worldwide markets. You sent me a video earlier today about Treasury bonds, what's happening worldwide with the sell-off of Treasury bonds and buying up of gold, often underreported. I mean, we don't often get the real numbers, but what are you seeing in the market there, and how does it relate to gold and the price of gold into the future?
Yeah, well, the U.S., obviously, we hold our own bonds too, and the U.S. and China and Japan have been selling U.S. Treasury bonds. The 10-year Treasury is sitting at 4.6, 4.7%. So it's basically sitting at the same numbers it was sitting in 2008, which is pretty fascinating. And then the thing that I think is concerning for the potential for runaway inflation or maybe hyperinflation is that the Fed doesn't have the ability to lower rates anymore. I think that's the one thing that everyone's been shocked by is that they've lowered rates 100 basis points over the last 12 months, 50 basis points and then a quarter and a quarter. And rates have actually gone up, right? Which that's never happened. I mean, this whole debt bubble started after 9/11 where they cut rates and rates just went to zero, right? They went to nothing. And we were able to get mortgages at 3% or 2.5%. So all this, so this whole time, everyone thinks like the Fed could just do that again, like they have the ability. But what happens is there's so much inflation, there's so much debt out there that wait a minute, the bond market's saying like they're like, I don't know if I'm ready to buy these bonds because I think inflation's going to be even high. I mean, that's really what's happening. Why would it continue to go up the 10 years? Because people are saying it's not enough. And so even though the Fed has talked about maybe lowering rates, there's a lot of people in the market that think rates are going to go up actually, and that they're not going to be able to lower rates. And that's because inflation is starting to creep up. It hits 3% and 3.25%. And then they will definitely not be able to lower rates. So it's something that's never happened. The Fed has lost their control mechanism. And I think they're quite concerned because I can guarantee you they thought when they've been lowering rates that, mortgage rates would drop, the rates would drop out there. And actually, they've actually gone in the opposite direction, which means that there is no faith. They don't trust the numbers and they think inflation's still going to be around. And so the 10 year is going to continue to creep up. And I will tell you, if the 10 year sitting at, 4.6, 4.7, that's a really troubling time for us as an economy because we also we own a lot of this debt. We have to pay back a lot of this debt at this higher rate. We're buying debt every time. And so we're buying debt at this higher number. And we know that, we're paying down our debt currently, our debt obligation, this US is like $1.4 trillion. And that's a pretty massive number. So if rates continue to go up, it hurts us also because we're borrowing a lot of that money too. So we're in uncharted waters in terms of the economy. We've never seen anything like it. And then there's this potential tariff situation, which I understand the premise behind it, but we'll see what happens. I mean, if they put tariffs on Mexico, and 80% of the silver that's produced in the world it comes out of mines in Mexico, and we need silver here in the U.S. And silver is going to come into this country with a 25% tariff. I mean, what's going to happen to the price? It has to go up. I mean,
of course, well, consumer prices are going to go up. I mean, with tariffs, I mean, that's the first thing that happens, right?
Yeah.
Market consumer prices, that's, it's logical.
Yeah. And so the tariff idea, I think, is good in that it would force companies to start to hire here and build plants here and to grow here. That's the idea behind it. The scary thing for a consumer in the U.S. is that you're going to end up paying for that initially for a while.
In the transitioning period, yeah.
Yeah, it's not going to happen overnight. So I hope it's more of a carrot, and it's not, a lot of these tariffs don't happen because I think it'll cost us a lot more money in the short term, just in terms of consumers. The other premise behind it is that if there is enough tariffs, that income could offset taxes, like our taxes. Of course, that's a great idea. I love that idea. Talk to me about that. But in the interim, I haven't seen a tax measure yet that'll lower my taxes. So I'm concerned about that. I can tell you this, there's not one person out there that is an economist that said tariffs will not lead to inflation. And typically, if you look at inflation scenarios, gold and silver will perform well in those environments, just because they have to. They're necessities, and the cost of them is going to go up, and people need to continue to buy them. So it's a very unique time in our history. Obviously, it's all based on the fact that our debt is out of control, and we haven't passed a bill to get any of our bills under control. It really all derives from that, right?
There's not really a solution on the horizon, to be honest, other than the ones that are sort of, in certain circles, whether that's a crypto solution but none of this has been publicly announced. So the market can only really go off of what is publicly announced. And
Yeah.
in my perception, over the next 5 to 10 years, you're going to want to have some safe havens that will weather the storm no matter what happens. So how can people take advantage of not just the silver and gold situation, but also sort of go out of that volatility from the other stuff and feel a little bit more secure? How can they work with your company? What are the options?
Yeah, I mean, we IRAs, 401ks we do in gold and silver. Obviously, very busy right now. A lot of people are doing it with tax time. They're trying to get their IRA set up. We also do, ship to people's doorsteps. It's an incredible time to buy gold and silver, especially bullion products. Great pricing, some of the lowest pricing that I've seen since I've been in the business. So we're selling these at unbelievable prices, these bullion coins and bars. And really, I think what it is it's an asset diversification play right now. That's really what people are looking to accomplish by getting these things. It's like, okay, I got some in the stock market, I got some in a house, I have some debt on my house. Like, what can I buy that doesn't have debt? These things, when you buy them, there's no debt behind them, so you own them outright. And as you go forward, I think you're going to see more of that happening, because a lot of the debt situation is the debt-based assets are going to get into trouble. I mean, unfortunately, credit card debt is out of control, well over $1 trillion consumer credit card debt. But even just corporations, I mean, with the 10-year going up, with rates going up, that's a bad sign for a lot of these corporations need to borrow money. And so borrowing at these higher rates makes it much more difficult to be profitable. So I think in my opinion, it's a duck and cover strategy right now. I don't think you want to be aggressive in getting into debt assets. You want things that are safe, and then you can get through this year or two of volatility. Because I do think if you look at the volatility index for the stock market, you look at just how high those numbers are, there's going to be a lot of this happening this year. And I think that's just based on the stock market where it's at, based on, a new administration, where things are going. And I think, listen, I think President Trump's taking an unpopular strategy, a strategy that, like, he's got 4 years. He's got to do some big things in these 4 years. And it is going to, long term, the idea of bringing commerce back here, bringing people making it's 100%. It's a great strategy. Obviously, securing our borders is a very strong strategy. We need these things, but these things cost a lot of money. And in the short term, we're going to pay for it through inflation. And there's just no other way around it. And hopefully by the end of his term, we got some things, maybe our debt is a little bit under control and we're moving in a better direction. But I think we're going to see a few years of bumpy roads in the economy.
Yeah, well, that's putting it. I love you put it diplomatically, mildly. I love how you even tempered you are about these things. I see actually, with everything that's happening, I actually see probably some turmoil, that it's going to catch a lot of people off guard because they haven't really been paying attention, and because we're in an age of perfect propaganda where everybody, when people know what they're doing, they can really sort of manipulate public perception around these subjects.
Yeah.
We're sort of jumping from bubble to bubble, waiting which one's going to burst. One of them's going to burst. But Collin, how can people learn more about how to work with your company and get in touch with you all and see what they can do?
Yeah, and we have so many free guides at Noble Gold Investments. We have gold guides, silver guides. I have a YouTube channel where I talk about the markets. So our job, and someone asked me recently, like, why did you start Noble Gold? Like, what was that? Is really about education. And so my team, we try to get you as much information about what we do and let you make a decision if it's the right thing for you, and ultimately decide for you and your family what's better for you. But I always say, like, getting information about gold and silver, doing something outside of the traditional right now, I think alternative investments have really proven to be winners last year. I mean, you look at cryptos, you look at gold was up 26% last year. Silver was up 13% last year. I mean, these alternative investments have really performed well. And there's a reason, because I think that at the end of the day, the traditional investments have had some problems. Real estate is obviously in a terrible place in terms of, the returns are bad. The debt is difficult to get and expensive, and it has not turned around over the last 3 or 4 years. And I don't know when it will turn around. But at the end of the day, if you want to learn from us, call and talk to a live person. Say you heard us here on the show, and get familiar. Let us send some information, ask questions, and then ultimately you can decide if this is something for you. But it's a good time to get that education and learn about what we do.
Fantastic. And Collin, where can people find your new book, Silver is the New Oil, and learn all about the silver explosion in the markets?
Yeah, it's on Amazon. It did hit #1 about 2 weeks ago. It was in 2 categories, commodities and wealth management. It hit #1 in new releases. So I'm really excited about it. Yeah, thank you very much. I was really, at first I thought, well, how many books did my mom buy, right? And so that was my first question. But I think Amazon knows my mother, and so it wasn't my mother just buying the book. At the end of the day, it's on Amazon, or you can contact us and we can get you the book too. So either way, it's there. It's paperback, easy read. Actually was reading it with my 8-year-old son. He was reading it last night. So if that gives you any indication, there's a few words in there he didn't know, but he's pretty bright. So he was reading about it. And
I see he's going to take over one day. I
see
how that
he is sharp. Yeah, he's sharp. He's like, the first thing he said to me, he goes, "Where's the picture? Why didn't you put a picture?" And
sure.
I didn't put a picture on the book. And I was like, man, there's, everybody's a critic here. But yeah, either Amazon or just contact us and we'll get the book to you and get it out to you either way.
Fantastic. So I have to correct my introduction. Founder and CEO of Noble Gold Investments and best-selling author Collin Plume. It's now official, best-selling in 2 categories. That's amazing. Yeah. Inspire Tribe. Here's what we say is, we got to take responsibility. To become sovereign is to become free, and that includes our finances, right? So you grow your food, you make sure that you can take care of as much as you can in your life. Gold and silver is sovereign money. That's what it's been for over 6,000 years. We believe it's going to be that for quite some time to come. So please hop over to noblegoldinvestments.com or call the number that's down in the description. Find out they're a great team, great customer service. A real human being will talk you through it and give you advice, and then make the decision that's right for you. Collin Plume, as always, a pleasure and an honor. Thank you for coming on, sir.
Thank you.
Inspire Tribe, we love you. We appreciate you, and we will be back with you again very, very soon.